So first thing I want to talk about is this position on Euro USD. We're going into CPI news this morning at 8:30. It's now 8:01. So we've got about 30 minutes until the news. When I show you the chart here and I break down this Euro USD setup, you're going to see why I avoided the position this morning. This goes back to what I've been talking about in a lot of my videos recently, which is having language to know what trades to avoid. It's great to identify winning trade signals and winning trigger signals, and it's even better to then backtest them and prove them profitable. But I think what a lot of traders lack, and even some of the professional traders that I've studied, I don't hear them speak about this too much, but it's really made a difference for me, and I hope it makes a difference for you. It's having language for trades that we don't want to trade. We call it C setup language, lower probability setup language, that helps us say, hey, this is an entry signal, but the other parameters of the checklist could be way better, so this is a lower probability trade. If something could be better in terms of what the backtesting tells us it should do, we know that that setup would be a lower probability trade versus if we were to go through the checklist and say, oh, this can't be better, this is as perfect as it gets, this looks great, this looks great. Those are the higher probability setups that we want to be involved in. So first thing we'll do before we even go into the chart on Euro USD is look at the news here. So you can see Forex Factory is always what I have open next to my charts. You can come here and see that we have high impact news this morning at 8:30. Like I said, this is CAD CPI news, however. So with this CAD CPI news, we saw last week the US dollar CPI news really shook up the entire market. So I'm interested to see if this CAD CPI news, because the Canadian dollar is still a big currency pair, but not the biggest like the dollar. I'm interested to see if this shakes up the Euro USD trade that James was looking at this morning. Now, this was called out by James in the live chat. James is one of the ASFX coaches. If you guys don't know him, you've probably seen me do videos with him, or if you're in the group chat, you know who he is. So he was looking at this to come down as it came through the 50 EMA. The bias is pretty clear. You can see this moved lower yesterday. It does form bullish divergence on the bottom here with that rising RSI and the falling price action. So that's the first thing you'll see in my knock here. Second thing on the list, bullish divergence at low a day. So what that tells me is as we're looking for this trade setup to present right here, I'll put it in replay mode. As we're seeing this present, we want to make sure that we are not anticipating it to just break through the low of day, not just because it's the low of day price set in the Asian range, but because there's divergence there. The fact that there's divergence and it's the low of day makes it a very significant level that we're going to make sure we read risk reward to. And as you can see from the entry point with a proper stop loss at the open price of that candle, it's only 1.5 R to the low of day. So that's the second knock on the trade. First knock is the bullish divergence, because it would be better if that was not there, because that bullish divergence means that the drop is either done or it could change. So that's a knock. The second knock would be that there's only 1.5 R to the low of day. And the third knock, which I think is probably the most important knock, is that the market sentiment line went from the sell zone into the buy zone here at the time of when James was looking to take the entry. If you were looking to trade this, where you'd have to trade it short, your market sentiment line would be in the buy zone, and that could be better as well. So these little stars here on my list, those are the things that could be better. Now, if we go to the 1 minute, this is not just a 15-minute shift candle with the 8 and 21 EMAs crossing. This is actually a D1 entry, which is really why I think James liked it. And I liked the 1 minute structure too. I just didn't like the 15-minute setup enough. So if you look at the 1 minute, we have bearish divergence here on top. You see how this RSI is falling right there? Price action is rising. That sets up the D1. We then make a lower high here at about 4:25 in the morning, and we pull the market sentiment line down into the sell zone. So that looks good. It then makes another lower high here at 5:46 before pushing down and closing for that 15-minute A1 entry, the shift candle. So now you have the D1 setup making lower highs into the A1 shift candle. Then it pulls back, retests the 50 EMA with the market sentiment line in the sell zone here, and that's another lower high off the D1 structure. You can see here's the top, lower high, lower high, lower high. This looked great. Market sentiment here pulling into the sell zone deeper and deeper. That looks awesome too. But once the market sentiment line now has come back up into the buy zone, that's the first sign that this trade might be done. On top of that, it's now broken through the 21 and the 50 EMA. So I'm assuming James is probably out of this trade because he said a break of the 21 EMA is where he would get out. So right there, those are the three things that kept me out of this trade, but it still fit the bill for what a system trade looks like. A system trade meaning it's either an A1 or an A1 and a D1 or a D2, one of the three systems that we trade. So it still is a system trade. It still has to get marked up. It still has to go in your back testing, but it's a C setup. So to my point at the beginning of this clip, these C setups, these lower probability trades, are not always, in my opinion, most of the time, they are worth avoiding, because more times than not, they're going to be choppy. They're not going to move to the full 2-to-1, 2R that you were looking for with our systems. And you're going to find more losses, of course, too. So you're not going to get your full risk reward. It's going to be choppier, and more likely you're going to add losses to your overall P&L. So that's everything on Euro USD. Are there any questions on that? I think I broke down the setup pretty clearly. Was there any questions on that?